ServiceNow, take a look at those shares. They're surging, best day since January of 2019. That's after posting a third quarter earnings beat. MoffettNathanson upgrading that stock to outperform today. And they are looking for 30% more upside. And they say, Josh Brown, quote, mega cap investors have a new home. What do you think?
A new home. I mean, I guess it's conceivable. I always have a hard time with that kind of thematic, approach and saying like, all right, this is now the next new thing that everyone's going to go migrate to do. So I think I'm a soft no on that concept.
Hey, I think they're just suggesting, look, they could deliver. McDermott, CEO, rock star. And maybe this is a place that deserves your money over some of the mega cap tech stocks that people have been piling into and maybe, as Joe suggested, overstayed their welcome.
Well, listen, it's certainly possible because the money does have to go somewhere, and I don't know that I would hop on that bandwagon just yet, but we'll see.
Joe? Not ServiceNow specifically, but what it says about the space.
I think Josh is right. And I think overall, you still have to have a defensive view of enterprise software. The economy is contracting. It's clearly in the beginning stages. That economic contraction is gathering momentum. How do corporations look at the enterprise spend? Do they begin to cut back on software? And remember, in the spending cycle, software is generally late cycle for the contraction. So I think you still have to have defensive positioning. You look at a name like Oracle, that represents what diversified defensive software companies can be. And then I also think you go back to the cyber theme, Scott. And that's been a dominant thesis for software for the better part of the last couple of years.
That's you and CrowdStrike.
Without question. And it's CrowdStrike, it's Fortinet, it's Palo Alto. It's all of those names. There's such a fundamental
Well, you can't cut that.
No.
Well, that's the thing.
Joe's right.
Yeah.
You can't cut your cyber, like, you could believe me that everyone in any kind of business, cyber is like the first and last topic at every board meeting. And it's the thing that you can't cut, because if you do and something happens,
you're out of business.
It wipes out everything else that you're doing. So we spend a lot on cybersecurity. Everybody does. You have no choice. So I agree with Joe. That is a defensive way. If you want SaaS in your portfolio, that is a defensive way to do it.
Which is, Jenny, why you own Palo Alto.
Right. And it's why we've been talking about this for the past quarter, where last quarter we saw CRM disappointed. Palo Alto actually had a great quarter. And we need to think about, as we get into a trickier economic cycle, where are the chief technology officers and the chief financial officers, where are they willing to spend? And they have no choice but to spend in CrowdStrike and Palo Alto. They could skimp on CRM. They could skimp on ServiceNow and get away with it for a while. So it's going to be dicey. It's why you can't just buy the software index. You have to be choosy.
You're choosy, Amy. I mean, Cadence, Design Systems, obviously Microsoft. We talked about Snowflake already. Splunk, Roper. Talk to me about those.
Yeah, no, I think companies are going to be looking to optimize their spend, and there will be companies that will benefit. And I think we don't own ServiceNow, but I think some of the others that you mentioned, we spoke about Splunk a couple of weeks ago, which also has assets and security and probably a relatively inexpensive way of playing that. But, I think there are pockets, and, the baby got thrown out with the bathwater in a lot of these companies, and there'll be good investments here.
All right. Josh, we're working on it. Don't worry. We got you.